Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. It is good to be with both of you. All right, Scott, before we get into your trades, I always like to get your big picture take on the market. It seems like kind of just some, sleepy Monday churn today.
It's definitely Sleepy Monday, a little bit of a give back from last week. And right now, I think all eyes are focused Wednesday. So there's I would say, just cautious trade up until Wednesday with Nvidia. And then, post Nvidia, we also get major inflation data later in the week with PCE. So, going into the holiday weekend, we could get some big moves later on. But I think for right now, we're seeing the VIX just pretty calm, and things, are going to remain steady and a little bit cautious before those earnings on Wednesday.
All right, Scott, let's get right into the names on your list. The first one is Solaredge. I looked at this chart coming into this, and I was like, whoa, what happened this year? So tell us about what, the stock is up more than 100% this year. That's year to date. Year over year, it's a different picture. But what's your view here, and where do we go from here?
So I love solar stocks, and this was just raised by UBS price targets. And if you look from the charts here and look at the breakout potential, look at where we've seen a ceiling, where we've seen resistance here, right about 33, and it's hit that a number of times here, including last Friday. We're down from there, but if you take a short-term view at this chart here, we get higher highs, higher lows. And I think on this little bit of a pullback here, that sets us up for the new breakout to all-time highs. So implied volatility, the option volatility is pretty cheap right now. So for right now, I am just buying September expiration 35 strike calls. They're probably in the $2.10 range right now. And, I'll hedge those at some point, but I think with vol pretty cheap here and the potential breakout, I really like this upside potential.
All right, Rick, you are all over the charts. This might have caught me off guard, but I know it didn't catch you off guard. So what do you notice about the chart?
Well, sure, the level near 33 stood out to me as well. To get even a bit more granular, though, 32.45 was our old high that we experienced back in this area when we made our more recent push to the upside here. It was looking like perhaps we were going to break out to the upside, but price retreated back within the boundaries of this old high that we saw here near about 28 as well. So we had this kind of sideways period despite that notable breakout. But then we formed our low point here. 29.50 was where we bottomed out twice during the past trading week or so. And then you did see us push to the upside. We made these new highs. But for now, price falling back below that crucial area near 32.45. On pace for a Harami type candle today, where today's smaller red candle is completely encompassed by the previous day's larger green candle. That can suggest a stall in momentum here. We can also see that RSI has kind of topped out around the same time several times here. Once we start getting close to that threshold of 70, historically things have taken a bit of a pullback here, at least temporarily. But if we were to look a little bit lower, we can see we have a confluence of moving averages here. Our long-term purple 252-day exponential moving average and our yellow 21-day exponential moving average, both coming together just below 29. So more emphasis on that area, 28.50 to 29.50. That area would stand out in terms of potential support. If we were to look out also as well, we can see that the volume is heavy around this area near 26. That's another downside area to consider. To the upside, +3 standard deviation channel comes in just below 37.
Okay, Scott, anything that, before we move on to your next trade, anything that you have to be mindful of before September 19th?
Sure, just any sudden announcement, any tweet. I mean, we're getting obviously more inflation data, and then we're going to get a jobs number also. So those two critical points, leading up to the Fed is really going to be the direction of what they do. Now, we saw some pretty decent changes last week in the probabilities of what a potential rate cut could look like, the new tariffs. So, I think we're going to be busy here, but there's a lot of important data coming up.
All right, let's talk about the next name on your list. You've got Datadog on your list. It's been an underperformer year to date. Where do you see it going from here? What's your approach?
Well, like many other stocks, a great recovery from Liberation Day, obviously. And now we've seen a little bit of a give back since last earnings. And the stock seems to be basing now or consolidating right at the 200-day moving average, the simple moving average here. Again, implied volatility, option premium, very, very inexpensive right now. So on this one, I'm just buying a simple call spread, a simple upside call spread going out to September 19th. The 135, 140 call spread, looking to pay $1.25 for that. I think that given what the expected move is and the fact that it is kind of forming this base here at a critical support area, I like the upside potential of this.
Okay. All right, Rick, take us through what you notice about this chart for our Datadog.
Right. So that trade would have a break even of just above 136. 136 is one of the important levels on this chart that caught my eye. That was about where we had our high before our gap up. That's where we hit lows. That was about where we opened up after the earnings gap downward. Then it was once again resistance and support. So now we can see that that could be a one upside level to watch out for potential resistance or breakout to the upside. For now, though, 131 is another key level. You can see it's kind of we've got our two red lines together here. Our lower red line represents this series of highs and this series of lows. So between 131 to 136 gives us an important zone that the bulls would want price to break through. Price also has found itself stuck so far today at our orange 63-day exponential moving average, which lines up right around that 131 level as well. RSI trending downward here, but approaching a potential push to the upside there that would break above that red downward sloping trend line here. So the bulls would also want that for some further confirmation of an upside push if the breakout were to occur. When we do look at our volume profile study, we can see that the nodes that really stand out are around 115 or so and around 130. And then there's a smaller one here near about 137. So those would be the heavy trading areas here. Ultimately, though, the point of control comes in near 143. That's the biggest potential congestion point here based on our trading volume. It also lines up with our +1 standard deviation channel. That could be an important area as well.
Okay, all right, Scott, let's move on to your final trade. Today we've been talking a lot about coffee because of that deal activity, but on your list today, it's not about that coffee deal. It's not about Peet's and Keurig. No. It is about Starbucks. So what's your view and approach to this one?
And Starbucks is my go-to. I drink it multiple cups a day. Starbucks, that is my go-to. However, looking at the charts right now, short term, I don't like the way the charts look here. It has had a lot of trouble breaking out after the drop last earnings. It rejected up at the 200-day moving average. And if it breaks 86-ish on the downside, there could be a lot of room down to 80. So based on that, I am buying, again, going out to September, I'm buying the September 19th 85.80 put spread, looking to pay about $1 for that. And again, I think this has had some troubles here really breaking out, and there could be some downside in the near future here.
Okay, that tends to be my coffee of choice, too, when I buy coffee away from home, Scott, so I share the same, viewpoints. But you make great points. So, Rick, take us through what you notice about this chart.
Yes, so this one, 86 also stood out to me here. We can see that that was a notable low point, our green line there that the price action hit in December of last year. From there, it proved to be resistance. Price had a little trouble getting above that area, a bit messier here. But once again, we can see it came back into prominence as a low point there. That's about where you might be starting to look for a low today as well. We didn't quite test that area, but we're getting pretty close at this point. And, not really the most encouraging technical activity for the bullish crowd here. Notice our pink line was a low point before a gap down. Price really couldn't push above that level near 97.40 or so. From there, trending lower. Our moving averages all clustered together and moving sideways. Price has dropped below them. All of these things suggest, first, the clustered moving averages suggest sideways to less directionality in general, but then price breaking below it and the moving averages starting to slope downward is one of the early signs of potential trend change to the downside here. Look for RSI as well to move lower and to push into that oversold area if the downward push continues here and the support does not hold. We can see that our supportive area beyond 86 could be around 83. 82.67 was a low point here. That's also where we have volume activity and our -1 standard deviation channel. So that could be a potential foothold before we would get down to those levels Scott mentioned near 80. That would be a pretty big decline from here.
All right. Thank you, Rick. That's Rick Ducat, our lead market technician, and Scott Bauer, CEO of Prosper Trading Academy. By the way, Scott, I love your backdrop. That room rater would rate very well.